While we're having a huge market sell out or panic even, we want to go into the Tesla valuation topic today because there is so much to say about this topic. Should we value Tesla as a software company or rather as a car company? Or rather as a tech company, or maybe we should reconsider the whole valuation overall because it was almost $1,000 per stock. Now it's almost $700 per stock, and in the last couple of days somewhere in between. And therefore let's move into the stock valuation and how to value Tesla.
Wolf of Dubai.
Now, first of all, if you're new here, make sure to smash the like button. This helps the algorithm to push these videos, my daily vlogs about stock market, Tesla and other growth companies to further people out there to build a huge community for us here to talk about stocks and finance. Now, let's start with the topic of Tesla valuation because it's one of the topics that there's like many different opinions on the Tesla valuation. It was just a couple of months ago when Tesla was still $178 per share. It was a dream. It was a dream come true for Tesla investors like us here on this channel, because since the summer I'm telling you guys that this company was way undervalued for this price. They had the Model 3 on the way, they are just ramped the Model 3, so the story itself didn't change, it was just confirmed and milestone after milestone came true, and the Tesla quarters were profitable and the cash pile was huge on the side. So all these good indicators was there, plus Tesla China went to operation, and therefore there was just a matter of weeks and months that the Tesla stock scratched almost the $1,000 mark. We just published a video yesterday about when and under which circumstances the Tesla stock will reach $1,200 per stock if you're interested in that. But let's talk about the valuation of Tesla. Now, we have seen some crazy things out there, especially with latest growth stock companies out there like Beyond Meat or Virgin Galactic, where was way crazy stock prices out there, and correlated to their PS ratios, PE ratios, and in the end they not even making profit, or in case of Virgin Galactic they even not launched one passenger into the space. So it's crazy what's happening on the market, and now obviously with the pressure on the market we will see a little bit of relief, which I think in the end it's a good thing. But if we are looking into those, the short introduction that I want to make here is the macroeconomics. Now, we have seen that big companies out there are having a hard time to grow. So for example, big industry companies are only growing by cheap money that is available because the economy is a little bit slowing down, and the stock or the company just growing by stock buyback programs, and therefore many people going into this FANG companies, which is Facebook, Google, Netflix, Amazon, Apple, and so on and so forth. So this represents almost 20% of the whole market in terms of valuation, and therefore all the money goes into these companies which show some growth. And then there is this other even further more growth promising companies like Tesla, like Beyond Meat, like Virgin Galactic, and obviously money comes here as well, and therefore the whole valuation have to be considered to be totally new. There's a nice interview of Shamat, I believe one of the smartest VC guys out there. I will link this interview below. But let's talk about Tesla. So Tesla valuation is a very interesting part, because is it the question to value Tesla as a software company? Now, in the matter of autopilot and other software features that Tesla is doing by their own, this is a real good question. So we will compare it to other software companies and seeing where Tesla stands over there. Now, is Tesla to be valued by another standard, like for example a traditional car company. Then we are talking about Daimler, Volkswagen, all other car companies out there. We know that their PE ratios in this capital expense business can be quite challenging, and the PE ratios are quite very low. The market currently doesn't look good for car sales per se, but electric cars is something brand new. Now, should we value Tesla as a tech company? Now, tech companies are quite interesting here as well, because we are talking then about maybe something like Apple. So we always know that Tesla being compared as the iPhone of the electric car, and Amazon also bringing new products out there that is growing and making a big change into a revolution into the retail and e-commerce space. Or should we finally compare Tesla as a growth company? Because growth companies are here really considered. If for example, Tesla is growing 50% per year, this is way more than any other companies like the FANG stocks. They are growing approximately like 30% per year. So this is quite interesting what you can expect from this vlog. So maybe also consider to not miss any other vlogs in the future, and consider to subscribe. And without further ado, let's roll. So software companies, if I'm talking about software companies, we are talking about companies like SAP or Oracle. Now, Oracle, for example, you know that the CEO and founder Larry Ellison is actually investor and part of the board in Tesla. He invested personally $1 billion on an overall net worth, I think, of $20 billion. So 5% of his net worth he put in Tesla, which is, I think, it's quite impressive, because you have to consider that most of his wealth is put into stocks of Oracle, obviously, and he don't have all this money in cash, and putting such a big amount into Tesla shares was very profitable for him over the last couple of months. Now, this company, software companies, has like a PE ratio of about 50 to 80 out there, depending on their growth. Tesla is currently on a forward PE of around 80. So you see, it's fitting on the higher range of software companies, and definitely with autopilot and other software gimmicks like robotaxi, which is more to the Uber side. We can see here that, it falls into the field of software valuations, but on the higher part of the scale. Let's talk about car companies, because car companies like Daimler, Volkswagen are around for hundreds of years. Now, these companies are currently way under pressure. The PE ratios here are quite significantly like single digit numbers, like 5 or 8 or 9, so depending on which car manufacturer you're looking into, Tesla is not at all considered apparently by Wall Street compared to this valuations. And this is where short sellers or other negative people on Tesla are saying that this is ridiculous. Tesla is compared by millions of cars that this car manufacturers produce every year. Tesla is just producing hundreds of thousands. Yes, but that's electric cars, and this is the future, guys, so make sure to consider this as well. So maybe a more fair comparison would be to compare Tesla vehicle numbers like 367,000 last year to the 18,000 of Daimler. So it's more than 20 times that Daimler, for example, sales. So you can see it's a huge difference here if you just consider the electric vehicles, and if you consider also all the capex that Daimler and other car manufacturers are having or had in the past. Debts are bounded to the ICE vehicles, so not even the debt that is consumed or used there for traditional car manufacturers are leveraged for the future that much like Tesla does. So therefore, here we see don't consider it as a car company, because then Tesla would be way overvalued. So let's talk about some tech companies. I'm talking about Apple, Apple or Amazon, that really revolutionizing things consumers like we behave. Amazon revolutionized really here, for example, the internet, how we purchase stuff, but also the back end. They, with their Amazon Web Services, you can see here that things are moving on a way bigger scale. Amazon want to really disrupt how we do e-commerce and retail in the future. They are innovating in all fronts. They want to have flying warehouses, and all these things are coming from Amazon. This is really interesting, and therefore I believe you can compare this to Tesla, where Tesla is going with their energy business as well. It will change a lot of big industries. And you know, Amazon, if you're looking now into the PE ratio, Amazon had a long time a very high PE ratio of 180. Even on the other side, for example, Apple was for very cheap. They had like a PE ratio of 15, 16, 13, depending on the year where you are looking into those numbers. But if you're looking into Amazon, then definitely Tesla is way undervalued. If we consider that Tesla could be compared one day to Amazon in a couple of years, that they disrupt transportation as per se, they disrupt the solar business, and they disrupt energy business. If these three things will happen, then you know it's something similar what Amazon is doing right now. They disrupted e-commerce and retail. They also disrupted the internet and how we host things in the internet, and they now want to disrupt the advertising business, because you know Amazon is obviously now like a search engine. People are going into Amazon to look for many things, and therefore Amazon want to use that to produce additional revenue with this advertising business. Last but not least, let's have a look in our nice growth companies. Now let's talk about, for example, Virgin Galactic. Now, to be fair, Virgin Galactic is a bit of a new kind of a company. They went way up, 100+% in the last couple of weeks, just by announcing a concept in the end of the day, and having a future forward PS ratio. Yeah, so we are talking about Tesla somewhere around 6-5, depending on when you're looking into that stock. But we are looking into Virgin Galactic as, you know, disruptor in a new kind of field. We are looking into something like 1000 in a PS ratio. So you can see that Tesla is more mature than this kind of companies. Like Beyond Meat as well, you know, has a huge ratios out there, you know, well in the hundreds. So, you know, you see that Tesla is way matured, though the growth potential in Tesla is still very intact. It's not like we are seeing now just 50% to one of the years, and now it's declining 50% on average of the last 5 years in Tesla. And that's why I love Tesla so much. So much value, so much to see in the next couple of years. So great products, so amazing fast management, and therefore without question Tesla is something that should be in your portfolio, if not already here if you're watching The Wolf. And therefore I believe that you know, Tesla is a really good choice. Talked about today about the valuation, you see that overall Tesla is not like crazy valued. For sure it's not the cheapest company out there, especially with the latest move, but maybe the current sell-off could be used to stack up some stocks.